own their own business, they think, oh, it must be, it must be so easy, and you get so much time then, and yeah, right, okay, sure.
Yep. Come shadow us for
Yes.
a day.
It doesn't even take a day, just a couple hours.
Yeah, pick up the phone at 3 a.m. Well, good morning, everybody. I'm going to go ahead and jump into this simply because we've got a lot to cover. We love to do this program over 2.5 hours with a lunch, so it's certainly absolutely doable without crunching things, but I do want to kind of get this, we want to get through this, all of it, and get you on your way as well. So thank you, good morning. I'm going to go ahead and begin the presentation. This is basically how to use the P&L to run your business better. That's really what this is all about. It's part of a Realize Your Dream series that Paul and I are developing. We are part of the Central Arizona College Small Business Development Center, CAC SBDC for short. We are in essence the good morning. We are the local office of the Small Business Administration. And I'll talk a little bit about that in a minute. Good morning, how you doing? Grab your stuff, take it easy. You're not interrupting whatsoever. Thank you to Queen Creek Chamber for hosting this event. We've given this now about 5 or 6 times, and this is probably the most important presentation that we've given thus far. It's about knowing your numbers and how you leverage those numbers to run things better. So again, I'm with the Small Business Development Center, and that includes myself and Paul. Paul is the main guy for up here. He kind of handles North County. I'm down in the South County more than up here. This SBDC is focused on 3 big things: counseling, training, and research. And we work with companies in all stages, but perhaps most importantly, all of our services are at no cost to clients. I don't use the word free. There is nothing in this world that's free. We are paid by taxpayers, but all of our services are at no cost. We don't charge for anything. So, and you'll find out later that we actually have stuff that we can provide you that is actually quite expensive. I had 15 years in corporate America. I was in the publishing industry. I rose to a mid-level management director of marketing in a large publishing company. And then on May 23rd, 2004 at 5:01 p.m. I said sayonara to the corporate world and started my own photography studio in North County, San Diego. I realized some success. I had 10 years of the greatest time of my life. It was incredible. Traveled the world photographing weddings, photographed very important people, presidents. And then there were 5 years of, oh my God, how do I pay my mortgage every month? Because of basically the ubiquity of digital cameras. Finally caught up with my photography business. I held out longer than most because of the brand I built, the location I was in, but ultimately this did me in. And after 5 years of rewriting the business plans, rewriting the marketing plans, splitting the company, starting to teach at the local college, anything I could do to pay the mortgage, I finally said, you know what, I can't make a living as a photographer the way I really want to and need to. You just can't anymore unless you want to. Next, click, click, click. Next, click, click, click. I was a custom photographer. I didn't want any piece of that, so I sold my beach bungalow and moved back to the desert in 2019. December, bought a boat in January of 2020, and then this thing happened, this madness. And so I just boated for a year and then got this job in January of 21, and that's the end of the story there. But that 5 years of WTF is going to play a role in the third part of this presentation. We're going to be working with my old P&Ls, and you're going to hear the tragedy of what that's all about. So here's what we're going to cover today. I'll first go over the objective. We'll start with the basics of the P&L, then we'll jump into a little bit more of dissecting the profit and loss statement. We'll talk about how you can design your P&Ls simply just by telling, let's use the 800-pound gorilla in the space, QuickBooks. just by telling QuickBooks a couple of things, you can get a lot more information from your P&L that's much more actionable. We'll dig deeper, and this is the most important part of it, is, okay, how do you finally use this thing to manage the business? Then I'll just talk in depth, well, not in depth, but a little bit more depth than I just gave you on the SBDC, and finally, any final comments or questions. Please stop me at any time if you have a question, comment, anything. That's the way this is going to roll today. So I kind of see business ownership as, it's kind of a maze. It's a puzzle. And it's constantly changing, right? It feels like you know, from Harry Potter when they're in that maze. Remember how the walls change and all this? That seems like that's a really good metaphor for business. How do I make my way through this, and how do I get to the payoff? So really, what the objective is today is, how do I use the P&L to run my business better? I know I've said that 3 or 4 times, but repetition of message is important. Okay, the caveats. Business ain't for the timid, right? To use comparing an analogy, it ain't beanbag, it's Sparta, if you know a little bit about what Sparta was. So this is a very high level, 30,000 feet, 515 mile an hour look at the profit and loss statement. We're not going to go into the nuances of this business or you know, any of these one-offs or things like that. We're going to talk in generalities. But for the most part, those generalities are going to cover just about everything that you're going to need to be concerned with. But we just can't, in this kind of situation, we can't go into each company's kinds of specifics. So buyer beware, so to speak. In my humble opinion, you must be using accounting software. I know that probably comes to you as, well, but there are still folks who manage their businesses through Excel, or you know, worse yet, paper. All the power to them, but accounting software is going to save you so much more time, and it provide you with so much better information real time so that you can make better decisions. And I also believe that you should be working with at least a bookkeeper level accounting professional. The way I ran my business, this made the most sense for me, was I learned enough day to day in QuickBooks. I could handle the sales receipts, invoices, I could do the reconciliation with the bank, but it was never perfect. Every quarter I brought in a bookkeeper. She was 52 bucks an hour, right? So every quarter, that's roughly 50 bucks an hour. That's 150 bucks. That's 600 bucks a year. And so I brought her in every quarter. She needed about 3 hours each time, and my data was clean every time. So I knew I had really exceptional data, but it only cost me 600 bucks a year to have that done. I then met with my CPA twice a year. He was legacy from back in my corporate days. And I met with him in December. Do I need to spend some money? Do I need to save some money? Where are we at tax-wise, preparing for taxes? And then I met with him in February to actually do the taxes. So for me, that was the best setup. But then again, I was a low transaction business. And I said, please don't take this as egotistical. I set out to be the most expensive portrait photographer in San Diego. I was able to get to that place. In a good week, I had 30 transactions. That's a really easy thing to handle, especially if you know just a little bit of QuickBooks. So that gives you a sense of things and how I work it. Lastly, the fine print. Technically, Paul and I are not allowed by charter to give you any accounting advice or any legal advice. That said, there are times, wink, wink, nudge, nudge, you know, like you should have an LLC, you know, things like that. So that's pretty much the way we go. So for many small businesses, what I find is that you guys know the business, what you do inside and out. You're professionals. This is your passion. This is what you do. But oftentimes, the business of the business, that can go a little bit lacking. And so that was part of the genesis of this workshop. Was a lot of folks are great at what they do, but when it comes to the business side of things, there's some stuff there that needs improvement. So that was part of the genesis of this workshop. The other is, in all likelihood, probabilities as they are, within the next 6 months, we should be facing some headwinds, macroeconomically. That's my guess. Right now, leading economic indicators have been screaming recession for quite some time, and yet the job situation isn't so bad, although if you go a little deeper into that, there's some issues with that too. But there's some things that look okay. My goodness, the equities markets seem to be doing well. So what's going on here? And at the same time, we have these leading economic indicators that are just saying, well, 100% of the time, they always indicate a recession within 6 to 9 months. Who knows? This is Arizona. The economy is far more diversified now. So I'm hoping if whatever storm there is, that we'll be able to weather it well. But in all likelihood, there's going to be some kind of headwind. And all the better to know your numbers, and the only way you know your numbers is through your P&L. So that's what was the genesis for this. So here's a P&L on the right-hand side to begin with. From my humble opinion, the P&L provides you with the real-time data that allows you to make better decisions. Fewer mistakes, that's something sometimes we don't think about. Yeah, with better data, I'm going to probably make fewer mistakes. Maybe even more importantly, I can make faster pivots, faster adjustments to things based upon real-time data. And then I'm a big probabilities guy. What we're doing is increasing the probability of success, right? That's really what it's all about. So if there's one thing to take away from today's presentation, it's this: you can only manage what you measure. It's an old rule of thumb. Have you heard that one before? Yeah? It's the same as plan your work, work your plan. You can only manage what you measure. So we are going to be slamming that at you all day long. Boy, I'm talking a mile a minute right now, aren't I? I can tell you what.
That coffee.
Wow, I've never had one of those before. Like, woo!
Yeah.
All right. Good stuff. Paul, you had your hand up before. I wanted to get to
I was
that
just going
comment.
to say, you made the comment, correct, very, very, very true. We are not allowed to give you legal advice, tax advice, accounting advice. Although I am a CPA, I cannot do that. However, I also teach. So I will tell my clients, I can't give you tax advice, I can't give you this advice or that advice. However, this is a teaching moment.
Wink, wink, nudge, nudge.
Yeah.
That's the wink.
Well, I don't even think wink, wink, nudge, nudge. It's a teaching moment because that is one of the things we do with our clients is we teach them. But then there's always followed up with, go see your attorney, go see your CPA. If you don't have one, I have the means for you to find one.
Very good. So what the heck is a P&L? Who here has experience with profit and loss statement? Fantastic. Okay. So this isn't foreign to you. The beginning of this presentation does take a fairly simplistic building blocks to this, so I hope I don't insult your intelligence. At least we'll be able to go through it more quickly. But this is my actual 2012 P&L. I've reproduced it here, so we'll refer to that every now and then. I will say that showing someone your P&L, it's a bit like opening up your diary. There's certain levels of embarrassment here too, and I'll tell you part of the story. Again, remember 10 years of wahoo, 5 years of WTF. But it's a bit like. And by the way, I've been searching for more and more analogies that are more appropriate for these situations because it's like opening up your diary. It's like lifting your skirt. Don't use that one. So I open the kimono? No, don't use that one either. But basically, the P&L is of course a snapshot in time describing the overall health of your business. So at any moment you can get that information. From my humble perspective, it's the most important data there is. There are two other financial statements that make up the big three. That's the balance sheet and the cash flow statement. Those are very important, but from working the business day to day, the P&L is the most important data we have. By the way, a P&L is also and oftentimes referred to as the income statement. So if you see income statement, that's synonymous with the P&L or profit and loss statement. And I should say, by the way, I was a QuickBooks user, and QuickBooks user uses income as their word. I'm going to do some slightly different things today. So, there are three major lines in a P&L. What's the most important line? What's the most famous?
In my experience, net income owns the most.
And that line is on the
bottom. Yeah,
it's on the bottom,
yeah.
right? That's called the bottom line,
Yeah.
right? That's the most famous line there is. And what is it equal to? Income, net income.
Which brought in.
There's another word for that, the P word?
Profit.
Profit, right? So honestly, you guys have been working your P&Ls, so this first bit is going to be a little low level. I'm trying to get some general terms that are kind of across the board, but the bottom line is equal to profit. So if there's a bottom line, there's got to be a top line. What's the top line?
Expense.
Your total income.
Total income. I'm going to use the word sales for this. It is total income, by the way. And of course, that is what QuickBooks uses. That's the phraseology they use. For purposes of the beginning of this, I'm going to call it sales. All right, just for a few minutes. Well, if there's a bottom line, there's a top line, there's a middle line, and that is expenses, exactly. So really, when it comes down to it, that's what the P&L is. It's three big lines that give you information. Going back to my profit and loss statement here. So the bottom line is, sure enough, at the bottom. So after paying myself with somewhere in there, oh, I guess it doesn't work on the screen there. There's payroll expenses, but at the end of the year, there was 50 grand left over, basically. Top line for that year was 217 grand. We'll learn later that 2011, so previous year, was 165. 2010 was 300. So you can see that that was the beginning of this, what is happening to my life? Things were starting to go wonky, again because of the ubiquity of digital cameras, and I needed to make some changes. Thank heavens, we went from 165 in 2011 to 217 in 2012. That was not by mistake, that's part of the story today. And then the middle line, there's 150 grand of expenses, but really the middle line is all of those lines, right? It's all of those expenses in cumulative. So, we can come up with equations, of course. The bottom line is equal to, anyone want to take a stab at it?
Middle line minus
Top minus middle.
Yeah.
Top line minus middle, exactly. So when I went to Arizona State University, the Harvard of Tempe. Thank you for laughing. Is there a U of A grad here or something? No? Okay.
It just wasn't fun. Sorry, you opened the door, I had to walk through.
Absolutely. So when I was at ASU, one of our professors who would do these big lectures and also discussions, anytime anybody answered a question correctly, he would say, throw that man a fish. Even if it was a woman, throw that man a fish. So that's going to come out a little bit today. Throw that man a fish. If we use the words that we just came up with, profit is equal to sales minus expenses. That's simple, right? This is basic stuff. Okay. So let's start to dig in a little bit deeper. Again, sales really technically is income, revenue. I've always had a problem though calling it income, but because income is what you have at the end of the day. For me, it's sales on the top, but that's just me. Some businesses, though, have returns, right? So how do you account for returns? Well, you've got to pull those returns out of sales. And so now we're going to refine that word, and let's think in terms of net sales, if you have returns. Anybody here have returns? You do? Okay, very good. So you do have to account for those, right? So in essence, really, the top line is actually equal to net sales. Are we cool with that? All right, very good. But we have other things that come into play. So there's this thing called cost of goods sold, which includes the raw materials, direct labor, packaging. If you pay commissions, if you have a location solely dedicated to production, you would take into account all the utilities there. So the cost of goods sold, which we see right here, COGS. So in my world, it was 16 grand. I'm not going to worry about the dollars. That's how much it cost me to produce my albums, my prints, all the things that I would then sell to my customers. So, COGS. Most importantly to understand about COGS, if you have COGS, is that these are variable costs. They will vary depending upon how much you sell, right? So, the more you sell, the more stuff, the more raw materials you need to be able to produce the things that you then sell to people. So the point is, if you can decrease that COGS, if you can bring down the cost of producing whatever it is you produce, that goes straight to the bottom line. And anything that goes, quote unquote, straight to the bottom line goes straight into your pocket, right? So it's about keeping more of what you make. For me, it was always a constant goal to manage the cost of goods sold. You know, how can I make sure that we are maximizing any labor that's necessary for the production of that stuff? Where can I get the best papers for the best price, that kind of thing. It's important to note, though, that any service-focused company does not have a cost of goods sold. If you're a service company, that's it. Now, I bet you guys sell stuff as well as servicing. These guys are in the HVAC business. Now, I have a question for you. Usually when HVAC also includes plumbing and some other things, do you guys do that whole
Sometimes.
shoot and match?
Electrical, plumbing.
Very good.
The old saying is like HVAC can do plumbing, plumbing can't do HVAC. HVAC can do electrician, electrician can't do HVAC. So we kind of handle a little bit of everything.
Okay, gotcha. Cool. So you do have parts and stuff and, and things that you have to sell that way too. So very good. And then there's this other thing that comes into play. So we have there's our cost of goods, and then there's this other thing called gross profit. Boom, 201 grand. So gross profit, I'm exploding it there to bring it up a little bit. So for me, gross profit for that year was 201 grand. And there is a formula for that. It's simply taking the net sales minus the cost of goods sold gives you the gross profit for the business. So gross profit, most importantly, only includes variable costs, those that change depending upon level of sales. Most importantly, this is a measure of the efficiency of your production process, right? If it includes all the variable costs of production, then that's what that's what gross profit is giving you. It's telling you how efficiently are you producing your stuff. Hence, lower cost of goods sold, the higher gross profit, which also, again, goes right into your pocket. The middle line we called expenses, obviously. So these are any expenses not tied to the production of goods, okay? We often refer to them as OPEX, operating expenses. And the middle line includes both fixed and partially fixed costs. What do we mean by that? Well, for instance, your rent does not change over the course of 12 months, right? Typically, your insurance does not change over the course of that time. Salaries are typically stated for a year at least. So if they don't change for a year, it's really a fixed cost, right? It's something you can rely on. Doesn't matter how much you sell, how much you make, you still got to pay the rent, you still got to pay the salaries, right? But there are partially fixed costs. For instance, marketing and advertising, as you're going through the year, you may decide, hey man, our sales are low. We probably need to spend a little bit more on marketing and sales. So you shift a little bit more cash that way. So fixed and partially fixed. Any questions on what those are? Should be pretty straightforward, I'm guessing. I'm hoping I'm not insulting your intelligence with this. Again, normally we have people in the room who have never even touched a P&L. So the middle line is everything between gross profit and the bottom. All right. So here are all those midlines. There's my administrative costs, interest on the credit card debt, marketing expense, insurance, rent, utilities, salaries, accounting and legal, and finally travel and entertainment. So there they are listed in the expenses, right? All those big categories. By the way, most of those categories also have subcategories. Again, remember, you can only manage what you measure. So you may decide, hey, I want to know more about the travel and entertainment budget here, so maybe we want a little bit more level of detail. And of course, with QuickBooks, you can choose to have no detail, basically, that entire line displayed, or you can ask it to expand that particular category and see what's going on with the subcategories, if you will. Again, you can only manage what you measure. So finally, with the bottom line, obviously profit, let's introduce a new term, net profit or net income, right? Again, that is even what QuickBooks uses there. So it's important to know, however, that that line right there is what's called EBITDA. That's earnings before interest, taxes, depreciation, and amortization. So this line right here, this 50 grand that was left over, that is EBITDA. Earnings before interest, taxes, depreciation, and amortization. There's a very important reason why we want that to be EBITDA. We'll talk about this here in a little bit, but think about it this way. So this is earnings before interest, taxes, depreciation, and amortization. Okay, first of all, if you're a business here operating in Queen Creek versus a business operating down in Marana, I bet you have different tax structures. At least at the city level, you're going to have different taxes.
Increased rate expenses.
Very good, right? It depends on the size of the loan for the interest too. You know, how big is the loan? Does everybody take out the same loan? No, of course not. So what we'll see is down the road that by having that number, earnings before interest, taxes, depreciation, and amortization, we can actually use that number to compare to other companies. That's going to be important here in a few minutes when we talk about benchmarks. Being able to compare. How are you doing well relative to the average business in your industry? Those are very helpful things. So we can ultimately come up with an equation. Bottom line, which we know is net profit, is net sales minus expenses gives us net profit, EBITDA. Ultimately, that's the final equation. Final equation. Never mind.
Drink more coffee.
That stuff is good. I really like it. But this is the the bottom line of the bottom line, if you will. Okay. So once again, hammering this whole message, you can only manage what you measure. That's literally the first portion of this to kind of get us up to speed on what the P&L is. Any questions on that stuff? It's pretty straightforward. You guys work with P&Ls, blah, 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 right? You feel good about things. Okay. So it's funny how simply by designing your P&L, how much more information you can get out of that data. So this next section is going to be about what are the things you want to turn on, basically, and display in your P&L. So right now, as you'll notice, I have just one column, and it's the actual expenditures, the actual dollars that were spent or brought in. But we can add different columns for more information. And you can save versions of those P&Ls, right? Do you guys, did anybody do that? You have multiple versions of your P&L?
Depends on if I need to buy something or not.
Pardon me?
Depends on if I need to buy something or not.
Oh, it does. Okay, all right.
As a small business owner, you sometimes want to claim more income to qualify for a loan, whereas you generally want to keep your income low. And
Reduce tax liability.
yes,
Yep.
so like I said, it depends on if I want to buy something.
Yeah, that's that funny game that we have to play, right? Oh boy, you know, doggone it, I wish I'd put more of that in there when I go up for the loan. You know, it makes things look better, but then again, most of the time we want to be able to reduce our tax liabilities, you know? Well, I had year over year, month over month, previous year, multi-year saved P&Ls, and you know, depending upon the information you're looking for, I highly recommend thinking about that, maybe working with your tax professional or your accounting professional to help you there. But, you know, you can hide certain sub-accounts, or you can just look at, you know, the top line of that thing, that particular category. You can even filter on specific jobs or customers. That can be very helpful when you're trying to determine the profitability of a particular job, right? So you can only manage what you measure. Let's dig in a little bit more. So this is the clunkiest part of the presentation, just let me tell you it that way. It's not that this is difficult. It's actually quite simple. Oh boy. I have a sister in the hospital, and that's my other sister calling. Nothing, you know, if she was in surgery, I'd be picking that up. Sorry, but it's okay. So this is a little kludgy to get through. Bear with me here. We are trying to get to a place, but we have to start simply. So here's my initial statement. Numbers are good, but ratios are better. Well, what do I mean by that? First of all, what's a ratio? If we go back to the old grade school math, simply a ratio is one number divided by another. And then after the division, expressed as a percentage. That's really all it is. So if I take 5, I divide it by 10, I get 0.5, right? And that's actually 50%. There's no apple hiding here. I'm just trying to get you familiar again with the old idea of ratios. And then a little bit more complex, 15 divided by 90 is 0.16. That's of course 16%, right? We all know all that stuff. But that in essence is what a ratio is. And I submit to you that numbers are good, but ratios are better. I'm going to continue through this. So, if we take any of our items over here and we divide them by net income, so we're taking a number, dividing it by another number, and expressing it as a percentage, we can say it's actually being expressed as a percentage of net sales because we're dividing it by net sales. We can get a little bit closer to more meaningful information. So if we take the gross profit, remember gross profit for me is 201 grand, and we divide it by our net sales, 217, we get this new thing called the gross profit margin. It is a percentage. We'll get, again, this is just the mechanics of things. We're working towards a rational ending. Same thing with net profit. I can take the net profit number, net income, and I can divide that by net sales, and that's going to give me this thing called the net profit margin. Again, expressed as a percent. Okay, so all we're doing, this is just mechanical stuff right here. So I can add a column, a percent of income column to my P&L and have QuickBooks divide each of those categories by the net sales to get these percentage numbers. So let me change the P&L here. We got it?
Yeah.
Oh, if you will, thank you. So all I've done is told QuickBooks to add a percent of income column. All right? and we'll work through this here. We haven't gotten to the punchline yet. Just bear with me, please. So again, we can take gross profit, divide it by net sales, and we get the gross profit margin expressed as a percentage. And sure enough, there it is on the P&L. Right there. So what this is saying is that our gross profit is 92.5% of net sales. That's all it says, right? We're taking 201,000, dividing it by that 217, and that's 92.5%. So our gross profit margin is 92.5% of net sales. Does that make sense to everybody? Again, we're not hiding an apple here. This is just, we're just dealing with mechanics for a moment. Same thing with net profit. I can divide that by net sales, and we get, again, the net profit margin, and sure enough, there it is at 23.3%. So that 50 grand is 23% of my top line 217. So far, so good? If you got that, then that's the hard part. So we can take any of these particular categories and divide them by net sales, and we get a percentage. Marketing divided by net sales gives us another percentage. Labor. Well, it turns out that these are very helpful things to do and very helpful things to see. We'll get to the punchline here in a moment. So again, numbers are good, ratios are better, especially if you want to compare previous periods in your company, month to month, year to year. Percentages are more informative. What was my percent gain year over year almost? Right? That's a better way of looking things. It gives you a better sense of things quite quickly. Also, you can use those numbers to compare to other companies, which we'll talk about in a minute. So here's the little exercise. You take a Casa Grande baker, for instance, and a Scottsdale baker. What's the difference between the two?
Yeah.
Oh, location, and what that implies, okay, demographics,
Rent costs.
the cost of rent, right? You could probably charge a little more though, because people are probably making a little bit more money, but certainly your rent or lease is going to be a lot less expensive. So there's very different cost structures that these two businesses face, right? So let's say that Casa Grande baker made 393 in net sales. Scottsdale did 704. Well, gosh, the Scottsdale baker's doing better, right?
No.
Not necessarily is the answer. Throw that man a fish. Same with the profit, right? Oh my God, they kept 15 grand, almost 15 grand more than the Casa Grande baker. They must be doing better. Well, when you look at their net profit margin, again, that's net profit divided by net sales, our Casa Grande baker ended up keeping 7.8% of what he sold, whereas the Scottsdale baker only kept 6.3%. So who's really doing better? Well, it depends on what you're looking at, right? But because we're looking at a percentage and a percentage EBITDA, right? Earnings before all those other things that really are location dependent, now we can actually look at those two companies kind of an apples to apples thing. If you look at it that way, you're taking into account all of those other things. So again, numbers are good, ratios are better for faster and more meaningful understanding of the information. They take into account the different locales and costs, efficiencies of operation, and ultimately gives you a better evaluation of performance. You can compare years, months, those kinds of things, right? And just as important, you can then analyze against other businesses. Those are using what's called a benchmark. Has anybody here ever used a benchmark? Okay, here's some new stuff for you. Finally, we get some new stuff for you. Benchmarks are, let me put it this way. So each of your businesses has what's called a NAICS code, N-A-I-C-S, North American Industry. So every particular kind of business, every kind of industry has a NAICS code. It's a 6-digit code that the government uses to track overall data in the economy. And with that, they can then create averages of the average HVAC business in the Western United States makes a net profit margin of, I don't know, 10%, whatever it is. It allows the government or other agencies to grab that information from the government and create these benchmark studies that are the averages for industries. And those actually will become rather helpful, you'll see here in a minute.
If you don't give them those numbers, they harass you and hound you.
Yes, absolutely. Yeah, the
I'm in
government.
process right now, I keep forgetting to do it. Then every week I get another letter.
Yeah, well, that's one of the joys of owning a business, my goodness. For me, benchmarks allow you to identify areas of improvement. My goodness, our net margin is 2 or 3 points below the average. What are we doing wrong? And from that, I think you can set realistic goals. Now we're starting to talk a little bit about how you use the P&L, by the way, but here we are against benchmarks. Ultimately, by knowing a little bit of information of the average business, it allows you to develop strategies to address those things. So, for instance, here is, this is a benchmark, industry benchmark. Boy, I can't point on that. So this is for, if you see it up there, flooring contractors. There's the NAICS code. See the 6-digit code? And this is for flooring contractors in the Western United States. On the column, here, you can see is the benchmark. So what this says is, the average flooring contractor in the Western United States has a net profit margin of 10%. We were working up a forecast here with this client, and their net profit margin was 8%. They're 2% below the national average. Now, this may not be a bad thing for a new company that's starting off. This is year one, they're probably not going to be as profitable as a company that's been in business for a while. But this is how you use benchmarks. In this case, we're using a benchmark. This is part of this great business plan software that we have available. And it allows us to help our customers get ready for loans, right? It allows them to put together the loan package. And benchmarks, I tell you right now, banks are using benchmarks all the time because they want to see if your forecast is anywhere near reality, right? It's informing us whether or not your forecast is within bounds of reality. If this was 43%, we'd have to say, what do you do? What better mousetrap have you created, right? So another benchmark here is, this is from a yoga studio. And a yoga studio on average should have 7.2% in net profit margin. That's the average across the industry. So it gives you a chance to kind of check against, what's going on out there? How well am I doing relative to other companies? And of course, we have 3 big market research tools that we use. And if you're a client of ours, all of that market research comes to you at no cost. So we don't charge you to be a client. We don't charge you for the service. We didn't even charge you for these things that are not so cheap. So it actually literally comes down to simply adding a column in QuickBooks called percent of income. And when you go in QuickBooks Online, which is just about what everybody's using, when you go to QuickBooks Online, you go to Reports, P&L, and then you'll see this percent of income category. Click that, and then you can further customize it, which we'll see in a minute or two. But now what I've got is a P&L with the second column that's giving me those percentages, right? Part of my story is going to be, well, I'll save that for a moment. So let's take it a step further. We added the percent of income. Let's add another one. We'll take that all. In fact, let's add 2. So what I've done here is I still have my percent of income, but now I've added previous year and I've added percent change. So what this tells me is the percent change year over year, and I still get my percent of income. So I know that, hey, by the way, you know, we're spending 4.5% of net sales on marketing. It's a better way of looking at your data, but it's also important because now I can look at, for instance, where is my marketing again? Where did I just find that? There it is. So in 2012, I spent $9,700 on marketing. In 2011, I spent $2,500, well, a little over 2,000 less. There's a reason I spent $2,000 more this year. If you recall, so this is my 2011 P&L. My 2010 P&L, that number was $300,000. So I lost $135,000 in sales in 1 year. That's called a fire drill. That's what's going on, what's happening here. Oh boy, let's spend a little bit more money on the marketing. We need to generate more sales, right? So this is the beginning of how you start to use the P&L. And sales are down. You know, can we spend a little bit more on marketing? Try to up our awareness, that kind of thing. So it's one of the most important ways to look at the P&L is, you know, how are sales going? What do we need to improve? But this is simply just telling QuickBooks, give me a previous year column and give me a percent change column. Now all of a sudden we have a lot more data. Save this as a version. Save them this, so this is year over year with percent change and percent of income. Month over month, right? That's really nice. Or the monthly year over year kind of thing. Year to dates, there you can save all kinds of versions of the P&L and be able to get to them fast. So simply by adding these things, you instantaneously provide more data and more information from your P&L. And what is, yes?
One thing is, if you are doing your own accounting, or I should say, if you have access to your accounting system, you may be sharing it with your CPA, that's great. And then you can do this, if they're doing the work for you, you should be asking for this type of analysis rather than just saying you made money, you lost money. Why? Where did it happen? So I'm agreeing completely with what Kevin is saying. I'm just saying if you're doing it where you have it on your system and you can access it, then you want to consider doing this. But if you don't have it on a system that you can access, I would advise you to go to your accounting professional, whatever level they may happen to be, and ask for that data. They should be providing it to you, but not everyone does.
Here's my philosophy. Until you reach the $2, $3, $4, $5 million level, and by the way, that's when QuickBooks really starts to just fall apart. Until you're there, you really should know your P&L, your numbers inside and out. I can't stress that enough because it's so crucial that you be in control of those things and you understand how they work. I don't mean to imply nefarious activity and those kinds of things, but if you know your numbers, no one's going to pull a Mickey on you, so to speak, right? You're going to reduce the probabilities of someone committing fraud, one of your accounting professionals embezzling, in other words. And by the way, QuickBooks, oh my God, it's so easy to delete a invoice here, a check there, next thing you know, you're making money off the company. So I think it's really important for you to know those numbers just simply for that reason alone. I hate to bring up stuff like that, but you know, we see it all the time. So by having these columns, with the current year, I know where I am. With the previous year, I know where I was. With the percent change, I know how well I did. And then lastly, with the percent income, I can compare to the benchmarks. Right? Does that make sense to everybody? And all we're doing is simply telling QuickBooks, give me a couple more columns. Give me some more information. It's really not hard to do. Again, I emphasize that, here I was in 2010. 2010 ends and we hit the magic number of 300 grand. And I knew that because through the Professional Photographers of America, they do a benchmark study every 2 years. And if you participate in that benchmark study, they give you the data. So that I knew that once a studio gets to this 300,000 range, there's this breakout. The business, there's a breakout at that level. All of a sudden you have the foundation to get to the next place. And the first thing I was thinking about was, oh my God, I'm going to be able to take a vacation. That I was thinking in those terms, right? Because I hadn't had a vacation. And that said, when you're traveling for photography, it'd be fun. But nevertheless, that was a magic number. Oh my God, we're here. All the money, all that 401k money that I just pulled out to put in there, oh, thank God. And then the next year, I'm down 135 grand. So, down 135 grand in 2011. Gosh darn it, we better make some changes. So, that's the next part of the tragic story. But simply add columns, whether it's year over year, month over month. You'll come up with your own favorites, if you will. And you'll also decide on what level of detail do I need.